of your investments and make the most of life. Tyler Matheson hosts CNBC's High Net Worth, Sunday 8 p.m. Eastern and Pacific on CNBC. Brought to you by Oppenheimer Funds, the right way to invest.
It's 2:40. Do you know where your stock prices are?
Stop trading!
On Street Signs today, 2:40 Eastern on CNBC.
Hedge funds are coming under the spotlight of regulators yet again. CNBC's Mary Thompson joins us now with more on this latest probe. Mary?
Right, Bill, this investigation may lead to the SEC's first standalone civil action against a hedge fund over a practice called naked short selling. Securities lawyer Andrew Stoltman says it's part of the agency's effort to prevent big investors from toying with shares of small companies.
I think the SEC's big concern is to prevent hedge funds from being able to manipulate stock prices, especially so on thinly traded stocks.
The fund in question is Sandal Asset Management, a $4.5 billion event-driven fund. Spokesman for Sandal and the SEC declined comment. But people familiar with the situation say Sandal received a Wells notice on October 19th and that the SEC's been probing the fund since April. At issue, naked short selling by the fund. Did it contribute to a steep decline in shares of New Orleans-based Hibernia Bank last summer? Its stock tumbled right after Hurricane Katrina, forcing Hibernia to accept a takeover bid from Capital One that was about $500 million less than the original offer. Remember, short selling is legal. It's a bet a stock will fall. An investor borrows a stock and sells it, hoping to buy it back at a lower price before returning the borrowed shares at a designated time and pocketing the difference. Naked shorting is when an investor sells a stock they didn't borrow. The SEC says this can lead to market manipulation, especially if the short seller delays or fails to return the shares they sold. Jeff Mackey of CNBC's Fast Money and a former hedge fund manager explains how it can impact a stock.
You could, in theory, have an infinite number of shares short for a company with a very finite number of shares. That truly could exert pressure into the downside on the stocks, as you would expect. I mean, if you can sell something infinitely, you're eventually going to run through all the potential buyers out there.
It's not the first time we've heard about hedge funds possibly being involved in naked short selling. Overstock.com CEO Patrick Byrne has been a guest on CNBC. He claims, of course, this led to the decline in his company's stock price.
And there are lawsuits surrounding that particular issue. So,
Mary, thanks very much. Mary Thompson.
that does it for us on Power Lunch. We'll see you tomorrow.
For our European viewers, Europe Tonight is next. For all the rest of you, here's Street Signs now with Aaron Burnett.
Welcome to Street Signs. I'm Erin Burnett. It is Thursday, and here is the rundown we have for you today. We're counting you down to the election on Tuesday, but the key question remains war or wallet. The polls say that Iraq matters more to American voters, but with another weak set of data on the consumer, will money be what matters yet again? And if so, which party gets a last-minute boost? We've got a series of live reports on this crucial question. Margaret Brennan has the latest retail numbers for you. Senior economics reporter Steve Leisman has the latest economic data. And Chief Washington correspondent John Harwood will talk about what it all means for voters, the big question of war versus wallet. Well, let's go first to Margaret Brennan with the latest on, Margaret, what certainly was a disappointing set of retail sales numbers.
Aaron, you're right. October had a lot to live up to, and perhaps we should have expected some give back after September's stellar performance here, but with favorable weather, lower gas prices, and a new fashion cycle, why are we seeing more misses than hits today? Well, we're looking at a divide between the upper moderate and low-end retailers. The biggest misses, according to Thomson Financial, were the discounters. It appears lower-income consumers haven't found their footing yet and aren't getting a spending boost from lower gas prices. Walmart's disappointing October and flat November outlook is pressuring other discounters like Target, which undercut expectations, posting only 3.9% growth. But get ready here for a big box price war. Walmart is leading the way on price cuts, but it may not be a game changer for retail overall.
Last year, Walmart was very aggressive in November. It created a little bit of a scare across the investment community in terms of retail investments. December came back very strong and, proved to be essentially an on-plan season.
Now, it's a different story for upper moderate consumers. Analysts look to this demographic and their employment numbers to test economic strength. Piper Jaffray estimates that the top 30% of the population is responsible for 70% of discretionary spending, particularly on apparel. This demo shops at department stores where numbers are strong. Saks and Nordstrom among the biggest surprises. Saks beating Street's estimate by 5.6%, Nordstrom by 4.5%.